Good evening, everyone. Good evening, all. A quick sound check. Am I audible? Can someone just confirm if the audio is coming across fine, guys? Great, thanks. Welcome all, and hope all of you had a great Nifty expiry. And before we get on with what happened today and how we could watch the moves from the options table in continuation to what we did last Thursday, let us start with the order flow chart of Nifty futures, and let us take this order flow from last Friday, which was the 20th of September. So last Friday, what we saw was an auction which was probing higher, and then it made a sharp dip in the afternoon, and then into the close, it closed with a very small kind of a spike. But in that spike close, we saw some big reds in the cot. So what we do at VTrender charts is we used to need use the entire combination of the order flow suite. It is not just one indicator which we use. So here, although the cot was showing us big reds, what was the order flow signal which we got? I'll just increase this a bit, because along with the red cot we need to get an IS bar for us to take a short position. Just the red cot does not mean that we can go short. Same with the other side, when the cot is green but you're not getting an IB bar, it does not make sense to go long. So cot is just one part of our order flow suite, and we need to take it in sync with the other signals and other features. So here what it was telling us that most of these reds could be profit booking of the longs, and yes, some of them could be shorts who have added. But what what follow up did they get, which was not at all seen? Because here if you see, we have these two NPOCs line on the 30-minute order flow chart at 25774, and this L period one at 25736. So the first thing which the sellers had to do in case they were serious about bringing this auction down was to trade below these NPOCs. But that was not the case. What in fact we did on Monday was we opened with a gap up. So this is the Monday's order flow, and why I'm running through this order flow is to show us how the order flow gives us the bias, and the 30-minute order flow we watch for the bigger player bias, and we want to sync ourselves with them. That is the reason we look at the 30-minute order flow as the buy for the bias, and then we do our execution trades in the 3-minute order flow charts. So here you can see we gapped higher on Monday, and we never got back into previous day's range. And what in fact we were doing, we did get this IS bar. We discussed this on Monday at 5 p.m. session also. And when we probe lower, ideally after this RS plus IS, we had to break this IBL, the first hour low, with an IS bar. But what we instead saw was huge greens coming into the market who were defending this IBL level. We saw this 4,300 green, 3,000 green, and then another 4,000 green. So these were our levels which we had marked, 25861 and 25858, where the huge greens had come. And after this green, we went on to get one more IB above VWAP on Monday into the close, and it looked as if it is going to be a bullish week. So that is how the order flow was telling us, and the cot also had changed to green. So this could be part of this could be the shorts who had entered at close on Friday booking out, and part of them would have been buyers who had booked profit coming back into the auction. But all said and done, we had this superb setup, And because of this IB, the POC before this IB, which is at 25,900, would have been our reference for Tuesday. And the VWAP of this day also was right at the same level. So this is how we were watching the order flow and looking at how to take trades on the in the option side. So I'll come to the trades part of today and yesterday. I'll give you an example of the 25,700 call of the order flow signals it gave today. But why I'm showing this Nifty futures order flow chart is for us to understand what the longer term bias is and for us to be in alignment with that bias so that we are looking for trades in that direction, and that will help us to catch most of the moves which come in. So here on Monday, you can see how we opened right at that VWAP level. We did not break this. We did not get any sell volumes. So at this open in the A period, it was very clear that the auction wants to probe higher, and it did probe higher. But what happened is here you can see big red card coming in, and we made the typical seaside extension. So seaside setup is known for halting the probe and giving a retracement. So that is what happened. We made the seaside extension and we saw some big red caught, which was telling us that these buyers were booking out. So that is the reason we went on to get a retracement lower. We were below VWAP, but end of the day we closed around the POC. So you're not able to take out this 26,000 level on this day, and we formed value at this 25960 level. So this order flow was telling us that the buyer had booked out at this level, and 25,900 was our reference on the downside, which was the support where we till that was holding, we could expect the buyers to be remain in control. And what happened on 25th, which is yesterday, was after a sedate open, we remained below this POC. So that was the first indication, and this was the VWAP also from Tuesday. So when we got rejected from this VWAP, it was very clear that it is going to test the 25,900 level, and a break of that can get us some downside, and a test of that selling buying tail from Monday, and which was from a 25855 and this POC where the buyers had initially come this week. So what we did yesterday was in the drop down, you can see how we've got big buyers and an RB bar right near that level. This 25856 is an NPOC from Monday where we got those big 4,000 lots buyers, two of them, and there was one 3,000 lot buyer also. So when we got this RB here with the sell side volume becoming zero, it was telling us that the auction is the sellers are not able to make much of headway lower, and the buyers are defending the zone which they had entered and they had marked on Monday. So unless we would have broken this 25856 level, there was no reason to remain bearish or bias on the downside for Nifty futures. So what it did, it consolidate for some more time, and then you see this 115 bar. Once it got above VWAP, you can see how the cot is changing the color. It became good green, and once it is above VWAP, so this RB plus this VWAP, uh, the takeover of VWAP by the buyers was telling us that now we are looking for a move higher again. So that is what happened into the close, and because of this setup, we got one IB, and we easily took out that 26,000 level, making new all-time highs and closed around the highs. So now once we got this IB, so the POC before the IB is always our reference. So this 25932 was our reference for today in case of a dip, and this IB POC would have been the immediate reference. So again today what we did was we opened higher, we remained above this POC. So this became our support for the day. And the fact that we were trading above this 26,000 BRN was telling us that there is change of polarity in the market. So as long as we were holding these two NPOCs, we were looking for more upside. So we'll come to the option table and see how the gamma zero was still placed at 26,000 for first half, most part of the day actually, in fact, and why, which is the reason why we were not looking for a short gamma setup today, and we were looking at more going long gamma because this 26,000 was being held both in spot as well as futures. So there was no reason that the gamma zero had to be at 26,000. So which is why those writers of 26,000 had to be forced out, and along with them even the 26,100 call writers were forced to come out. We will see those charts in a bit from the options table, and let us just review the order flow which happened today. So today again, once we opened above the previous NPOCs, we have left a small AP rate buying tail, and we remained above VWAP all day. So you can see how the dip to VWAP here got another 4,000 lot buyer. So this is telling us even this BP rate bar has got a big POC at 26061, which was our support for the day. So this was telling us that the buyers are completely in control, and they went on to make the new highs. 26125 was what we were expecting, because that was the 1.5 IB of the day, and this was a very good profit booking point for the longs, and obviously we trail our rest of the positions to cost. So what happened in the next TPO is we made a dip to VWAP, and we got a big buyer right at this, right above this 26061 level. So this was suggesting that we can extend higher, but we had to wait for the K period, because K is where the actual action happens. So, but and we speak about the J period as the joker period, because most of the times it gives us a contra move like the C side. So what we saw in the J period was a quick swipe lower, but you can see how the swipe lower was more to do with, I think, low volumes in that time period, because you can see zeros even on the 30-minute charts on the sell side, and then we have one big red at the lows. So this 2819 seller is coming right at the lows of the bar, and this is an RB bar. And if you see on the 30 minutes, we have still not been able to close below VWAP. So on an intraday chart, if you expect the seller to be in control, the seller will want to maintain the auction below the VWAP. So if the seller was pressing here, he should have closed this auction below VWAP. So immediately, as soon as the K period got back above the highs of the J period and this VWAP, it was very clear that the buyers were in control, and this was just a swipe. And we went on to break higher and make those new highs of 26260 into the close. So this is how, again here you see we've got a fresh IB bar on 30 minutes. So if you see on the 30 minutes, we have not got a single IS bar apart from the one we got on Monday at the open, not Monday, so yeah, Monday at the open, which got negated with this IB and these two big greens. So on 30 minutes, we have not got any IS bar all week. So that was telling us that our aim for the week for the trades should be on the longer side, and we need to wait for the setups to show us long side buy signals even on the options front, and accordingly look to take trades in that direction. And you can see how many IBs we got. We got this one IB on the 30 minutes, and then that IB got negated. We got this RB, and then we got this second IB here, and then we have got another IB here which got negated. It was not a good range as such, and then you've got this IB at close in the K period today. So going forward now, because today was the expiry, we will have to see what has happened in the October futures chart and accordingly take the references. But if we would have continued the September series tomorrow, this NPOC of 26130 would have been our main support. And till this is not broken, we would have remained biased to the upside. So this is what we saw on the 30-minute order flow charts in Nifty futures. So it was very clear from Monday that we have buyers, initiative buyers who were coming into the market, and those buyers kept on coming back. So that is the reason we had a big good up move in the Nifty futures all this week. So now coming to the options table. So how do we trade the options, and how do we utilize the options table based on what we saw in the order flow in Nifty futures. So in options, we have already discussed last week how we can see switch back at what time we want to see the option, and accordingly see what kind of open interest was building up on the option front. So as you can see, the gamma zero level was at 26,000 at the open, and even till I think the G period it remained at 26,000, and H also J also it was at 26,000. It was only in the K I think it shifted to 26,100, and then it moved higher to 26,200. So how what does it take, what signs do we get to see at the open or in the initial balance that the day cannot be a short gamma day? There are days when it is very clear that it is going to be an option writer's day, and you can look to short that straddle or a strangle and hold on to it till 2 o'clock and eat those premium. But today was not that kind of a day. How can we say that? So from the options table, what do we do first? We already saw last week how we can open the straddle chart from one click. And which straddle chart do we open? We open the straddle chart of the gamma zero level. So 26,000 was the gamma zero level, and I will open the straddle chart of this 26,000. We have the strike price in the middle column in the options table, and we have these two icons of the market profile chart and the line chart. We'll open both market profile and line chart of this straddle and see what clues they gave us at the open, which was at the initial balance. So if you are a straddle writer, you can see how we keep getting A period selling tails in this straddle. So when that A period selling tail comes, most of the days you will have these A period selling tails. So when those A period selling tails are coming in the straddle, you know that this is being written. But compare it to what we got today. Today, this was the open, and although we made new lows of the straddle, we left an A period buying tail. So this is a very uh, rare thing for the gamma zero to give us the straddle give us a period buying tail. So this was very clearly telling us that we cannot be on the short gamma side for today. So selling straddles were definitely not on, and that we could have seen that in the premiums which are not decaying today as they actually do on an expiry day. There was hardly any decay in both the call and the put, so which is why this straddle was remained in previous value almost for the first part of the day. So when you have this A period buying tail, you are only looking at this uh, gamma zero giving you a long gamma setup. So for that to happen, how do we trade that? You can also look at the line chart of this 26,000 straddle and see how the open interest kept building up till even 12:15 till the J period. It was only here when they started to come down after that 1 o'clock bar, which we saw in the order flow also. So then after that, this OI began to just keep falling. Once that JTPO swipe happened from the K period, you can see how this green bar, which got above VWAP, caused this big fall from almost 10 lakh OI to 6 lakhs into the close. And most of this OI would have been on the put side because the call side were taken out completely. So how do we use this information? You on the line chart, we've also discussed how we can watch both uh, market profile and the line chart in one window using the dual window mode, one browser. So on the left, I have the market profile chart of that straddle, and on the right, what I'll do is I'll put up the line chart of the same straddle. So what it is telling me, it is showing me till when the OI is rising and when the OI is starting to fall. And so that it is clearer, I'll just have today's data for this straddle, and we can see how we can make use of the market profile as well as the line chart in sync. So you can see how from the morning this straddle remained above this POC and VWAP of the day. Any dip to VWAP was being defended, and this POC, which was at 136, held all day. So that was a very important cue. Unless we broke this and stayed below this, this straddle was always going to give you a long gamma kind of a setup. So how do we don't need to buy both the call and the put, because when we have these charts, when we have the order flow, it is going to be very clearly seen which of the writers are going to get hit. So you may as well just trade in that particular strike once you get the confirmation. So here you know that this and K period always has been one important one. So K period, we even in the room, we are all extra alert and we are looking for that opportunity, especially on an expiry day, because K is where the Dukan trade setup uh, gets matured completely. So once we get a setup in K, generally it leads to continue in L and M also. Today it did not continue in the M, but L gave a good move higher. So here you can see how once it got above VWAP in the K, it never came back at VWAP and the OI kept falling. So this is about the straddle. How do we utilize this on the options chart? So before I go to today's options chart, we already saw the 30-minute order flow of Nifty futures. Okay, I think 25,700 is not seen now, but what we got, I have some screenshot. I'll just try to share those screenshots from yesterday's order flow and then come to today's examples of the call options. Yesterday we saw that big RB coming in the dip lower when we made the range extension in the E, but we were not able to sustain. And after a balance, we began to form a balance below VWAP, and once the VWAP was taken out in the 115 bar, it was a clear case of being higher. So I'll just share this screenshot which I had saved just to okay. So is the line chart visible? 25,700 call. I have shared this image from yesterday. This is yesterday's. I have not even yesterday's and today's afternoon. So what we did yesterday, you can see how we dipped below this POC and VWAP, and how when we saw that RB and then IB at VWAP, this was the confirmation at 130 that this option is giving a upside. So I'll also show you the order flow chart from the same day. So I hope the order flow chart of yesterday is visible. This is a 25,700 call from yesterday. So you can see how that RB we got in the Nifty order flow has shown one RB at 210, 212 in this 25,700 call. And after this, we got these two IBs. So we've got an RB and we have got two IBs. So it was very clearly telling us that this is poised for a move to the upside. And what do we need next? As I mentioned, if the buyers need to be in control, they need to take it above the VWAP. So this option had to get back above VWAP. So once it got back above VWAP in this 124 bar, this NPOC of 222 from the IB bar became the reference. And you can see how from that, once we got above VWAP, that VWAP held for the rest of the day, and that resulted in a swipe higher. So here we have got another IB above VWAP. This dip in the 142 period at VWAP gave us an RB. and the 222 NPOC was still held. And this was a time where we were still consolidating at VWAP. And once we got this IB, the new IB, this is the third IB we have got in this call. And now we are sustaining above VWAP. So it was very clear that now this 231 would be our new reference. And once after that, we went on to take support. When the KP rate started yesterday, we took support right at that POC. VWAP was much below. 231 was our reference. You can see this NPOC line, which is extending at 231. But as the KP rate started, the call took support right at that POC. So this white bold line is the POC of the option. So POC and VWAP are both important references which we follow even on the line charts. So I have mentioned that, and that is how we look to trade the option. So when it was taking this support at POC, we wanted to get that more confirmation of IB forming so that we can look for a fresh long trade or uh, tighten up our stop loss to the upside. So what we did get one IB bar, and this POC of 254, 253 was the reference which was defended. It And let me come to that last bar. As I was saying, that 253 level was defended. As you can see, the dip in the 3 p.m. bar was right at that level. 253 was the low. So it was telling us how this IB bar and the POC below the IB before the IB bar was holding. And once we got this swipe in the 3 p.m. bar yesterday, it was very clear that we are headed higher. And now this 279 NPOC from this bar, this IB bar, would have been our reference for today's auction. So this is one example of yesterday the 25700 call, which showed us IB bars, and accordingly we take trades. And this is not just the signals did not come just in the order flow of options. They were actually started by the buying we saw in Nifty futures. So from there our bias had changed. We were looking for more upside. So coming to today's, we have already discussed the line chart of the straddle. Now let us have a look at the 26,000 call line chart and see what happened today before we move on to the order flow of the same. So as you can see, yesterday's VWAP and POC were at 52 level, 52, and today we opened well above that. And in fact, once we got this green bar at 10 a.m., this low, this POC and VWAP never broke for the rest of the day. So although we were not getting too much of upside here, but the fact that we were above this POC and VWAP all day was always telling us that these writers at some point of time will have to get out of the uh, position. And this dip which came in the J, you can see how it stopped right at that POC and VWAP, just like what we saw in the order flow of Nifty futures. The VWAP held, and once that held, the open interest began to fall because the writers from previous days also had to come out, and we got this big up move. So we'll just have a look at the order flow chart of the 26,000 call of how it could. So Balaji has a question. He asked if we need to enter after two IBs or wait for options to cross VWAP. So Balaji, that is what I was explaining. I started with showing the 30-minute order flow of Nifty futures. So that was telling us what our bias for the week was. And yesterday when we got that RB at a big buying level of Monday, we were looking for the auction to probe higher. In fact, yesterday in the room, at the same time, I had mentioned that Nifty is ready to take off. So that RB plus IB below VWAP was hinting that the option is ready for an up move. How do you trade it? You can take the trade after the IB plus IB signal. Your stop loss would have been the RB bar POC, which was 210. And if you take the trade after it is closed above VWAP, which I showed the bar, then your stop loss would have been the POC of the IB bar, which was at 222. So your entry and how you position size will depend on your comfort level as a trader, and accordingly you can take those trades. So because that was a very good swing trade which you could have held on to if you would have taken the trade at the close above VWAP with a stop loss of 222, and accordingly booked part of your positions and taken forward rest at with stop loss at your entry price. So let us have a look at this 26,000 call, and we'll have a look right from the open and see what kind of trades we could get in this, and what was the afternoon signal where we could have convincingly got into a long side trade in this. So this is the order flow chart of the option from the open today. And as you can see, the opening POC of this was at 74. And we had seen how the VWAP and POC of previous day was around the 50-52 levels. So even at open, the fact that we were above these two meant that the writers who had entered yesterday, because the gamma zero was at 26,000, were in trouble. And we have left zeros at the lows, and it is a good green bar which we left in the opening 3 minutes. So with this 74 as your reference and zeros lower, you could have held long in this trade. So how do we then look at re-entries and fresh trades? So here what we have done in this swipe higher, we have got big selling. Those the sellers were coming back in the swipe. They were trying their best. The writing was happening. So this is an RS. So we would wait for an IB to show up, or we would see what it is doing at the VWAP. So you can see how it remained above the POC and VWAP, which we saw also in the line chart. But the upside we were not getting good. This was an IB bar, but the price did not close at the highs. In fact, the price is closed below the POC. So ideally, this is not a good IB signal which you would want to consider. Compare this with the IB which we saw in the 25,700 call yesterday. The IB was in the middle, and that POC was not tagged itself. Here you can see in the following bars, the option is below this POC. So no way it is a good IB signal. IB signal, although we take the stop loss as the POC from before the bar of the IB signal, the IB signal POC itself is a good support. And if it is holding, we can expect immediate move coming in that call. I'll show that to you in the same option which we are watching in the uh, later trade. So here we were just biding away. We were in a narrow range, and what we were doing, we were making new highs, but we were getting more sellers which were coming in. So it was the stop losses of some writers were getting hit, but we are not getting any clean IB bars in this. So what happened here was then again the same thing happened. 155 was the previous high, 157 again we got an RS. So what happened here was then in the J period we made this swipe. You can see this 209 swipe which came at the closing in the of the JTPO, and you can see how we swiped below the VWAP, but the VWAP and the POC were not able to show us an IS. In fact, it showed us an RB bar. So this was very clearly telling it has made an attempt and it has not got any chance of going further down. So here it once it got back into this IBH, above the IBH, it was a very good clean upside trade, and we could expect our the writers to come out. How would you trade this, and what would be your references? So the first point, when we got above the VWAP with this bar, although this is an RS, it is very clear that now this POC 104 would be your stop loss into the close, and as long as this is holding, you look to enter and keep booking long side trades in this 26,000 call. This was the time even when the gamma zero also shifted higher, first to 2600 and then to 26,100. So here you can see how the IB low was holding. 122 was not broken, and then we got this good IB bar. So this is the kind of IB bar you want to go long for. Although here the price is just close at the POC, this In fact, this was also a good green bar, and this NPOC would have been your new reference to stay long in this call. And this is the time, this was the KP rate. So we know this is the time where the writers are going to get squeezed out. So we need to hold on with a good reference, and this 146 would have been our TSL coming up from this 104 and this 122, which was the IB low. And then although we were kind of staying around this POC, you can see how none of the bars closed below this POC. So this is a difference between a good IB signal and not a good one. We saw the previous IB signal where the auction could not stay above that POC. Here you can see how the next bars remained above the POC of this bar. So this is when you know that more upside is there, and with this as your stop loss, here you also have zeros in the order flow, and zeros tell us that the market has moved away from that zone, so it will become support. So this taking this low right at the zeros was telling us that this is a good support you can look out for. And from here we went on to make these new highs, and then finally gave this RS over here, which was the telling us that yes, now the up move is done. At the same time where we hit this 261, Nifty futures completed the 3IB setup. So in market profile, we have the range extension setup where we trade for 2IB and 3IB. So Nifty futures had hit exactly the 3IB mark, which is where we got these highs. So this is telling us that this is a profit booking level. So even here, what we have done into the close today is profit booking by the longs. So this is not, there is no case, even on the order flow we saw of Nifty, there is no case of going short. Let me just get to the Nifty October futures and see what happened in that, so that we can talk about the most important rollover point from the October series and see what where it is placed. So although the 10 bar cot is red here, what have we seen today? We saw the POC of AP rate holding all day, and then we saw a range extension to the upside in the KP rate, and we have seen new all-time highs being hit. So what we have seen into the close is similar to what we saw last Friday, big red. So, but this is still in order flow. We've still got an RS bar. We have still not got an IS bar. So to go short, we will need an IS bar on 30 minutes, and which will break this VWAP of today, and which is coinciding with this POC of this KP rate. This KP rate POC would be one important reference for the October series 2425 246, and the VWAP of today is also around the same place. So this will be the all important reference for tomorrow and the week coming ahead. As long as we are holding this, we can continue to be bullish in Nifty futures. And in case we feel that the sellers are taking control, which generally happens in the first week of a new series, we have seen that happen last three series, I think, where the first week and 10 days we get a fall, and then the market reverses and continues higher into the close of the month. So let us, but for that to happen, that is just past data. We will need confirmation from the current data for that to repeat again. So we have red caught, but we will need an IS bar on 30 minutes, and we will need to break this POC and VWAP. Only then we can look for the sellers to look for some probe lower. So the rollover point of Nifty futures would be around this 26310 mark. So this will be our reference for the entire series of October. The Bank Nifty rollover point was at 54340 yesterday. So that is where the highest volumes into the close came in. And Bank Nifty, the volumes are not that great yesterday. So we can expect some more volumes to develop in the coming sessions before we can get a clear view of how the volumes have shaped up for the series of October. So this is how we read the order flow, and we look at what has to be done. I'll just close it to the 3 minute. Yes, 3 minute we have got IS, but this has come at the fag end, and this is more of profit booking. So as I mentioned, our bias comes from the 30 minute. So once we get the bias from the 30 minutes, then we will look for entries in the 3-minute charts. Here, our bias till yesterday's VWAP is held is still to be on the long side. So this IS plus IS we will not be considering because we also have an IB in between. So as a short trade, if we get this IS plus IS again at open tomorrow and we break this VWAP of today, then that will be a good enough short signal with a stop loss above the POC of the first IS bar. So that is how we use these line charts and order flow charts to trade options. And I hope it is making some sense of what we cover in these sessions. And that is the reason we come with live examples so that we can see how we have made use of the same in our VMR, the VTrender mentoring room, where we discuss these charts, we discuss what is happening, and accordingly look for good trading setups. So that is it for today, guys. Any queries, I'll be happy to answer them before we wind up. Strike wise options chart, you are asking, Balaji? So this is nothing but showing you the put and the call open interest of every strike price. You can see how in the morning we had the maximum put and call at the 26,000, and the put remained the same and kept on increasing, whereas the call began to build at this 26,100, and then in the afternoon it was that at the peak the 26,100 call, and then it began to drop once the K period began started. So you can see how into the close the 26,100 call, which had gone up to I think 9 lakhs, came down to 1.6 lakhs. So we have lot of these strike wise charts. We have the spectrum, we have the options, gamma charts. So you can select whichever you are comfortable with. All of them are giving us the information of where the highest open interest is building. So you can take this back and see how we had the maximum open interest at 26,000 at open, and then how the put kept adding, and the call which started to drop at the 26,000 began building at 2600, and even that began to fall into the close. So this is how it is useful, how you can make use of it. And the main chart what we see which covers everything is this MTM open interest options chart, which gives us the gamma 0 level and the range. So you can see how the gamma 0 was at 25,900, and then 26,000 for most part of today. Yesterday into the close, the gamma 0 had gone up to 26,000, and till the H period today it was there. It went up to 26,100 for a bit, but again came down. Then again in the J period it came down, and in the end it went up to 2600. So this is how we can use the spectrum chart, and the range it shows up are very good levels to watch out for, and you can take those levels as your option long side trades. For example, if the lower range was 25,900, you can look to trade the 25,900 call option when you are looking for long side trades and options. Same with the put. 26,200 was the upper range. So in case you're looking to go long in the put side, when you get signals in the order flow, it is best to go with the 26,200 put. and you also have these open interest. You can see the call open interest kept falling all day, and the put was rising, and it was the same into the close, whereas the call got a fresh move lower after the K period started, whereas the put kept on rising into the close. So this spectrum chart gives us the bigger view of the market. It tells us where the inventory is placed, how the inventory is placed, what is the range you can expect, and what the option inventory is doing, what the option OI both on the put and the call is doing. So this is the overall near the money option open interest. So individually you can go to the option table and look at the nearest gamma zero or the one strike into the gamma zero level for writers to get squeezed out and a good Dukan trade. Gamma trade, we have gamma chart. We have some good videos covered in YouTube, Anil. So you can go through them. And I think we will have one session only on gamma soon. So that will be even good revision for the gamma section. So any other queries, guys? So you can send your queries even on X. My X ID is open at Uttam Goel for any queries you have. And as we always want all of us to be in the same boat and look at the latest information, make use of this wonderful setup we have, and make most of it in the trading process. So that is it for today, guys. Thanks for joining in and have a lovely evening. And let us see how the October series begins. And we'll come back with the weekly review on Monday, 5 p.m. Yeah. Thank you for joining in and see you.